Good afternoon, everyone, and welcome. I'm David Isaacs with the Semiconductor Industry Association, and thank you for joining our webinar in which we're going to cover the recent report we issued on emerging resilience in the semiconductor supply chain. My colleague Robert Casanova is unavailable, so I'll be pulling double duty as both a moderator and a panelist. And we're going to give an overview of the report and then do a deep dive with our excellent panelists here. First, we have Ramiro Palma, who is a managing director and partner at the Boston Consulting Group. He's located in Austin, Texas, and BCG has been our longstanding partner on several of these reports, and we're grateful to have Ramiro here. And then we're also joined by Dan Kim of the CHIPS Program Office, and he's the chief economist and director of strategic planning at the CHIPS Program Office. So Dan, thank you for joining as well. We're going to cover a lot of materials here today, but hopefully we're going to try to leave room for questions from the audience. So if you have questions, please type them into the chat and we'll do our best to accommodate you and get to them given the time limitations. But with that, let me dive into it and turn to Ramiro at BCG. Thank you again for your excellent work on the report, and hoping you can give a little bit of a high-level overview of the report contents for those who may not have had a chance to review it. So Ramiro, let me turn it over to you.
Wonderful. Thank you so much, David. Very excited to be here today, to be with all of you. I appreciate the time everyone has made to join us today. If we jump to the next page, as David mentioned, the most recent report on the emerging resilience in the semiconductor industry is the fifth in a long series of reports in collaboration between BCG and SIA. And back in 2021, when we first looked at the semiconductor supply chain, what we observed was that global integration had been tremendously valuable, but it also created a number of choke points in the supply chain, and there was a brittleness or a risk that had sort of been induced or created therein. And subsequently, what we've all seen, of course, over the ensuing years, is the impact of industry's response and government's response to this, and that's really what's at the core of this report. And so if I jump to the next page, just maybe I'll start with the tops of the waves in terms of what are the key findings or the key takeaways. And so we continue to find that global integration has created significant value in the supply chain, and it still has created some areas where there is concentration risk. But as I mentioned, action by both the private and public sector, a resurgence in industrial policy is helping to ensure that over the coming decade, as $2.3 trillion of capital is deployed within the semiconductor industry, it's deployed in such a way that there is a greater level of resiliency, a greater level of balance across the entire supply chain. And so what we see and expect through 2030 is that there will be major shifts in the distribution of investment and major shifts in the development of the supply chain within the US, Europe, and Asia. And as we look beyond this, what's going to be required to make it successful? We'll talk about some of we talk in the report about some of the key things. Talent, a top consideration, and there's also some, I think, policy elements as well that are important, especially related to trade. So I'll now double click into maybe some of the specific findings in the report. If we jump to the next page, just to set the stage, we talk about the value of global integration, and so what we wanted to do is dollarize that, and to do that, we compare the current state to a hypothetical world where there's a kind of a level of self-sufficiency across different major regions. And what we find is that the current level of global integration has effectively freed up $1 trillion to go into capital for building new factories and R&D for developing new chips, has an ongoing benefit of somewhere between $50 and $125 billion a year, and on balance has led to significant efficiencies in production. So chips are about 25 to 40% cheaper than they otherwise would be. But as we mentioned, there were a number of choke points. We talked at length about this in our prior report. There's been a shift then. This is the number from the previous report, but there are 50 points in the supply chain where more than 2/3 of global capacity was in one region. And so if we jump to the next page, the response to that has been, one response to that rather has been robust, industrial policy and incentives by various governments across the world, in the U.S., mainland China, EU, Japan, South Korea, Taiwan, et cetera. Everyone is sort of participating in the overall kind of resurgence or policy initiatives. And here we kind of summarize some of the main programs. I won't dig too much into this. I think what's more interesting is if we jump to the next page, the effect that is having on the way in which capital gets allocated globally. Because one thing that we have found is, there's some discussion about this. Does government policy induce additional investment or not? And you are kind of finding in that would create some risk of oversupply. But what we found is effectively most policy has resulted in a redistribution or rebalancing of investment. And so you see here the sort of the distribution of capital across the globe. And so the x-axis is basically the location where capital is going. So if you look across the bottom, it's in order is Taiwan, the US, Korea, Japan, et cetera, so on to the right. And the striping, the width of the bucket is the amount of global capex is going to a different region. So for example, Taiwan is a region seeing the highest level of investment between 24 and 32 at $700 billion. And then the striping is the region that is effectively the source of the capex. And so that you see that that large kind of brownish color on the far left is effectively TSMC and UMC and others Taiwanese companies investing in Taiwan. If you look across the chart, though, and if you were to compare this to 10 years ago, what's really a remarkable difference is the level of the striping and the striation, as well as the width for certain countries, for example, the US and others. So there's been a pretty big distribution and redistribution of capex. And if we jump to the next page, the net impact of that is a transition or a shift in relative capacity by region. And so one thing that's interesting about the industry, given that factories tend to operate for extremely long periods of time, there's a very large denominator. And so $2.3 trillion is a lot of capital, but some of these numbers in terms of the redistribution are only shifting by a few percentage points, but it still is quite significant, especially in areas like leading edge logic, so sub 10 nanometer logic. You see kind of a pretty big transition, especially as it pertains to the US. And there's other areas as well where there's kind of been larger shifts. And so this chart here sort of shows some of the bigger transitions, across different geographies. But it's not purely a function of wafer fab capacity. The next page shows, as an example, shifts in assembly, test, and packaging. And so you can see here from 2022 on the far left to 2032 on the far right, the sort of global distribution of assembly, test, and packaging capacity. And one thing that we're seeing, which is quite exciting, is an increase in sort of non-traditional or new players, and so smaller players. And you're seeing a lot of diversification. For example, I think Vietnam is highlighted here in this chart is expanding pretty dramatically from 22 to 2032. But you see also the expansions in Malaysia and other regions as well as different companies diversify their manufacturing networks and their manufacturing bases. Not presented here, but in the report as well, we have analyses on different parts of the value chain, including design, including front-end materials. I read today that the level of consumption of US-based materials is going to increase by 7-fold over the next decade. And so you see the same sort of pattern that's playing out in ATP and in front-end wafer capacity is playing out in really every segment of the value chain. And so if we go to the next page, just what's going to be required to sustain this? How do we move the ball forward? How do we continue to build on the great progress and the transition that's happened over the last few years? I think there's 4 main things that we highlight in the report. The first is fostering talent at all levels. And so everybody talks about talent. Talent is an area of differentiation, competitive advantage. It's also an area of constraint in the US. And so there's going to need to be, and other regions as well, there's going to need to be a significant investment in talent, both in developing new talent and also ensuring the talent is able to move across borders to be able to go to the new areas where these jobs are kind of going to be popping up. There will be need for ongoing rational industrial policy. What's happened now in terms of changing the curve or bending the curve rather on where investments are made is amazing. But there is, of course, obviously the need to see that through and to ensure that the investments that are being made today are able to be kind of consummated and are successful. I think there's an opportunity to continue developing new markets. So there's programs like ITSE, for example, realizing the full potential of that, executing there. And then the last element to highlight is just sort of the maintenance of, to the extent possible, maintaining trade in open markets. The industry is so scale intensive and benefits so much from scale that as kind of trade corridors are restricted, as trade flows are restricted across different geographies, has negative effects on the ability of participants to reinvest. And so with that, I would maybe pause now and hand it back over to David for any additional remarks he might have.
Great, thanks, Ramiro. That was excellent and brief overview. I should add the full report is available on our website along with some accompanying materials, and we encourage you to all read that. One quick process point: I was corrected to any questions should be directed in the Q&A function at the bottom of your toolbar, not in the chat. So please feel free to enter any questions there. So before I turn it over to Dan, I'd like to just emphasize a couple of things from a SIA perspective that I think really underscore the progress that we've made under the CHIPS Act in particular. And the report goes into many of the incentives around the world, but just focusing on the very significant impacts that the CHIPS Act has had, want to highlight a couple of the charts, including some that Ramiro showed. So first and foremost, the world as a whole is growing in fab capacity to meet growing demand, and that's all very good. But as depicted in this chart, the U.S. has the largest increase of fab capacity in the world projected over the next decade. 203% is over tripling of U.S. fab capacity, and that's very significant, obviously, and particularly if you look at the prior decade in which we grew only 11%. So we're performing above the average in the coming decade, or projected to perform, and in the prior decade we underperformed as compared to the rest of the world. And we think that that's important for the U.S. economy, supply chain resilience, national security. All the key goals of the CHIPS Act are being realized here, and that's very important. Going to the next slide, if you look at the share of U.S. capacity, many of you are familiar with this chart. There was a multi-decade decline in U.S. fab capacity from the 90s to the time the CHIPS Act was enacted at 12%. The important point is we've declined further in just the year and a half, 2 years, to 10%. And we are projecting to reverse that curve and increasing U.S. fab capacity to 14% of the global share. And in the absence of actions like the CHIPS Act, the report projects it would have declined further to 8%. So in our judgment, that's very, very significant progress. And going to the next slide, the U.S. is capturing, this just depicts in a different way what Ramiro already showed, that the U.S. is capturing over a quarter of the global CapEx, and second only to Taiwan. That's very, very positive from our perspective, showing that the incentives are working. And I think there's one other slide, if I'm not mistaken. Yes. So Ramiro showed this, and I think the important thing here, if you hone in on the blue bars, and maybe Dan can speak to this in a little more detail, but the U.S. is growing in almost all the key market segments, whether it's DRAM or logic or analog, and particularly on the leading edge. If you look at chips below 10 nanometers, over the coming decade, the U.S. is going from 0% to 28%. I know that was an important goal of the secretaries, and we are forecasting that that goal will be realized and perhaps exceeded. So we think that that's very significant, again, from a national security perspective, economic growth and security, technology leadership, and supply chain resilience. So a very positive picture from our perspective. And so with that, let me turn it over to Dan and get the insights of the CHIPS Program Office. Thank you.
Well, thank you very much to Ramiro and for David, and thank you for the invitation to be here. And again, thank you for SIA and BCG for commissioning this report and getting a little bit of a report card on the work that we've been doing here at the CHIPS Program Office. I think, let me just make a few quick points here, and we'd love to take some questions from the audience here that I'm sure is very distinguished. This report and what's been presented to us by Ramiro and David provides really important context to the work that we're doing here day in and day out at the CHIPS Program Office. And particularly, it highlights the negative momentum and downward trajectory that the U.S. manufacturing, semiconductor manufacturing competitiveness has been experiencing for the past 30 years. And of course, what we're seeing is a reverse of that. So part of what we're doing is to try to reverse that downward momentum. And we see the evidence of that downward momentum not only in the overall production share that you saw in the numbers presented, but for other ways that I see it personally. So one is that we have not seen significant greenfield expansions of new production clusters in the United States for a long time. And this is despite growing global demand for semiconductors and several inflection points in production technologies and demand. The second is that we still see facilities that should and could have been modernized for more efficient production, for better competition globally, but have not yet done so. Third is that we see a chip production labor workforce that is rapidly near retirement that need an immediate additional investment. And of course, the risk here is not only the potential lack of workers to fill these new facilities we're building, but to make sure that we ensure an increase of labor productivity to compete globally when our labor cost profile in the US tends to be challenged compared to our East Asian competitors. And of course, this is difficult to do without facility investments to jumpstart workforce investments as well. And finally, and perhaps most importantly, we have chip customers, whether there are fabless companies that are driving AI revolution right now, to automotive and medical device manufacturers that have been informing us that they assume, essentially by default, that US-based production roadmaps of semiconductors simply may not exist to support their industries. And that has been the trend. And that is despite the fact that many of them would like or perhaps prefer domestic sources and options. So what this report shows is the effort that it takes to reverse this trend and create the opposite positive momentum, which is not easy to do. But we're clearly seeing evidence that the efforts that we're doing here at the CHIPS Program Office and the execution of this bipartisan effort is starting to work. And just my personal experience is that it's as if this industry has been waiting for the U.S. chip manufacturing ecosystem, including through government support, to restart our engines for something that's been stalled for a long time. The figures that Ramiro showed is essentially a result of a combination of new greenfield investments, particularly in leading edge logic and DRAM, and also in high volume manufacturing for more mature feature-rich foundries, and modernization of a variety of facilities across different technologies. And we're laser focused here at the CHIPS Program Office to create and push on that positive momentum. So far, we've made several public announcements of preliminary memorandum of terms to fund several projects that will effectively create and support new manufacturing clusters, and also smaller deals that will involve supplying increased supply to critical end uses for national economic security. I had my team here pull some comparisons as to what these greenfield projects will involve, and a couple of fun facts for you here. It'll involve about 131 football fields worth of new clean room space, enough structural steel to the equivalent of 11 Empire State Buildings, and enough cement to fill 3.5 Hoover dams. These are just some massive projects that we're undertaking that we're really glad to see take off with our support. But we must recognize a couple of critical realities. First is that we have $39 billion in manufacturing incentives over the next few years. But we're dealing with an industry that is spending about $150 billion per year in CapEx. So crowding in private sector capital is critical to our success and to make a permanent impact, like the ones that Ramiro and David are showing that we could have. Second is that it's a top-heavy industry when it comes to capital expenditures. So about 50 to 70% of the $150 billion or so per year is spent by the top 5 or 7 companies, which are investing heavily in leading-edge logic and DRAM. So the decisions of these companies really do determine the production locations and production location landscape and create new technology and technology roadmaps. There's and I'll get to this perhaps in the Q&A session, these new production clusters create scale as well as create a gravitational pull for suppliers to create self-sustaining ecosystems. We, of course, have more announcements to come, more funds to allocate. They will be focused on more mature node technologies, but also upstream suppliers that will service the growing production ecosystem here, and production that are critical for national and economic security. We are focused too that as we announce these projects to create lasting and productive partnerships with the applicants and awardees to make sure that the projects that have been proposed achieve success with partnership with the government. I'll pause there and look forward to the discussion that we have. And again, my thanks to BCG and to SIA for this wonderful report that we've all had a chance to digest here at the CHIPS Program Office and gives us momentum to continue to work hard.
Great, thanks, Dan. And I love those factoids. We'll have to turn some of that into an infographic or something. The clean room space and steel and all that. Dan, let me keep you on the hot seat here for a minute. Maybe you could speak to the dynamic that Ramiro and I both referred to in terms of the expansion of fab capacity here in the U.S. at the leading edge. That's obviously been the focus of the initial announcements by the CHIPS office and the bulk of the funding. How do you see that playing out, and why is that important to the CHIPS office?
Yeah, as we said, we recognize that the decision of top spending companies has a large impact on how the global production landscape is shaped. In some ways, if the sole goal was for us to increase the share of wafer capacity overall relative to the world, there are actually less expensive ways to do that than to invest in leading edge technologies. Leading edge wafers are simply more expensive because they are more difficult to make and because the end use products tend to be more high value driven. But the positive spillovers for investing in leading edge are very clear. That there is technology innovation, they're at the forefront of production technology innovation. They require scale to build massive structures, multiple fabs in one site to get the cost down, the average cost down of production to be globally competitive. And so we have focused our efforts not only as a function of having our leading edge related proposals to be open a bit earlier than others, but recognizing that they're an important part of the ecosystem. This is not, of course, to ignore the extremely important functions that mature node technologies play in our economy and as well as in the ecosystem. There's plenty of innovation happening there, and it's something that we need more of here in the United States. And Congress has given us very specific directives to spend a minimum amount of $2 billion to spend on that, and we look forward to executing on those directives as well.
Great. Ramiro, just any observations in response to what Dan has laid out?
No. I mean, nothing I would add. I thought that was great. I thought that was a great synopsis. So.
Okay. And Ramiro, you're frozen on my screen. I don't know.
I noticed. Yeah, I see that I'm frozen as well, but I guess the audio is coming through.
Okay, good. The audio's it's good seeing you, but the audio is more important. Great. Well, so shifting gears, from leading edge to other parts of the ecosystem, you know, um, Ramiro, what are your thoughts on the forecast going forward on other parts of the ecosystem, both in fabrication of other technology segments and as well as other parts of the ecosystem?
Yeah, just in terms of general, vulnerabilities or things that are top of mind. I think if I look at that, there's a few things, and I'll put these in play as things that I think about, not necessarily, I think that industry is also focused on these things as well. But some of the things that I think are interesting and potential challenges going forward. Um, I mean, the first thought is, the cyclicality of the industry. I worry, or I think about the fact that some of these, nascent investments are the spark. And if there is a, kind of a downturn, or if there's cyclicality, what happens to the spark? Are we able to continue to sustain it? And so that's one thing that that keeps me up at night a little bit. I think, overall, I'm excited to see how some of the other package and test, assembly test packaging investments and that segment of the market plays out. I think that there's a lot of excitement from various countries that have not traditionally been homes to package and test, and so I think that'll be pretty interesting to see. And another thing that also I spend some time thinking about is just like the portability of products, right? And so it's great that we have built and are building greater resiliency, greater more diversified manufacturing footprint. But it's always interesting to me that it's still non-trivial to move. If there's a natural disaster, some sort of event that makes takes a specific factory out of commission, it's quite difficult to move production from one facility to another. And so I'm interested to see what maybe some of the things that come out of the NSTC in terms of rapid porting of designs or other things, how that plays out.
Great. Dan, any comments on that?
No, I think, one thing that the report is not showing that's actually very difficult to show is how to increase resiliency of supply chains in addition to building additional capacity. So, for example, what we experienced in the post-COVID world of supply chain is, we experienced an unusual increase of demand for chips. And so it placed a stress test on the entire ecosystem and how quickly it could rebound. And so that kind of flexibility that can be built into the system is not just showing in additional capacity. It could be shown in how inventory management is done, for example. And so I think the thing that we think about here a lot at the CHIPS Program Office is what kind of conditions and terms would be the most effective for us to discuss with the applicants to make sure that we are maximizing the dollars that we're investing in. And a lot of this, quite frankly, is things that companies already want to do because of the experience they've had during COVID, to make sure that their inventory management and supply chain flexibility and management is actually reflected in their investments. And so we're really glad to see that. And what we'll see is, in some ways, a competition of better business and supply chain models to serve their customers more efficiently and more reliably. And we certainly see efforts to do that and are encouraging of it in our application process.
Great. And just one thing I'd like to add, and for folks who have heard me speak on this topic, you've probably heard me say this before, but throughout the advocacy on the CHIPS Act, we emphasize repeatedly that the goal was not for the U.S. to become independent or divorced from the global supply chain. We emphasized in every meeting that the global supply chain is and remains vital to the success of the industry as a whole. It would be prohibitively expensive. It would be foolish. It would be a waste of time to try to replicate the global supply chain. But rather for economic and supply chain resilience and national security reasons, there were certain capabilities that we need to have more of that activity happen in the United States. And so that was the goal. And I think the important finding of this report is that we're making great progress to achieving that goal, or at least moving in that direction. So I think that's extremely important. One question, Ramiro, you touched on the growth in packaging and the diversification of that part of the ecosystem, and including some projects that are being invested in the United States. Can you, and maybe this might be the subject of a future report, but can you speak to the differentiation between conventional packaging and advanced packaging?
Yeah, of course. I imagine most folks on the call are quite familiar, but I think, from the purposes of a policy perspective, I think one of the key differences is just the cost structure. And so for more traditional, packaging, the cost is much more labor intensive, and it still is there's still a large capital component as well, but the cost structure is such that it's quite difficult, I think, to do traditional packaging in the U.S. unless you are exposed to, unless you're at the end market is a very high reliability market. And so there's a kind of margin premium there. For advanced packaging, because there's so much more capital intensity, it sort of is getting much closer to manufacturing, front end wafer fabrication. It is economical to do that in the U.S., as you can kind of see by the SK Hynix announcement in Indiana, by what Intel's doing in New Mexico. I think Samsung has also announced advanced packaging as part of its Taylor expansion, and so I think that is that's kind of the big delta. I think some of the things that you've seen in the U.S. announced that are more traditional packaging are more exposed to that kind of like high reliability auto, defense, et cetera. So that's I think maybe the big split from a policy perspective.
Great. Dan, any comments you want to offer from the perspective of the CHIPS office on the importance of packaging and investments there?
Well, thanks, David, for the question, and Ramiro, thank you for your perspective as well. We recognized early on here at the CHIPS program office that advanced packaging will be and increasingly so a critical part of driving Moore's law forward. If you look at what is driving AI today, it is the energy efficiency per compute that is not possible to achieve without advanced packaging. And that is done by both foundries, some OSATs, some memory companies. This is increasingly a critical technology differentiator in the industry that will play itself out, right, over the next few years, and I'm sure decades to come. And so we found it important to be attracting those investments here to make sure that we have those technology roadmaps available here in the United States. I'll say one more thing, David, if you don't mind. Yes, I believe you captured it correctly that this is a global industry. I'm in the business now. We're in the government function of encouraging U.S. investments, but there is a recognition here that we are not aiming for technology or production autarky, that this will remain a global industry, this will remain a global supply chain. But to your point, we needed to increase the supply of chips here for certain critical technologies and the volume we needed to compete globally. And in that regard, we have a dedicated team here at the CHIPS program office that is solely dedicated to working with our international partners so that there is no misunderstanding between what we are trying to do and what our partners and allies are trying to accomplish, that to the extent possible, there's coordination of these efforts, and that, some have been quite cooperative with us. And of course, they're all curious as to what our funding decisions will be. But we're very happy to say that we have great productive relationships with all of our allies and partners in doing that. And some of the report content that you have is to do with the progress that other governments have made in terms of what they're offering. And we have good visibility into what those are. and how we could fit into that global um, uh, incentive structure as well. And we're happy to say that at the moment, we seem to be driving a lot of investments that we have targeted into the United States, and on track for success.
Great. I'm trying to juggle the audience questions as we're proceeding here, and it seems like one or two of them pertain to what we just discussed. So the first question is, and I'm paraphrasing here, what's the importance of advanced packaging as we reach the limits on Moore's law? You know, I'm not I don't have the technical expertise to fully address that question, but I know from an industry-wide perspective, advanced packaging and innovations in packaging are viewed as vital to innovations in semiconductor technology. Many of you, I assume, know about heterogeneous integration and the promise that holds in driving the technology. I think that as traditional scaling is approaching its limits, I think there's a lot of runway on innovation in new materials and new architectures, and packaging is certainly part of that. And that's one reason why another part of the CHIPS Act invests heavily in research generally, but also specifically on the packaging program. So that's my short answer. Let me turn, Ramiro or Dan, anything you guys want to add on packaging?
Yeah, I mean, I think Dan emphasized really nicely the criticality that advanced packaging has to the future. The only thing I would add is it's one of the core elements of future innovation in the space, right? You think about more and more, and then more than more. Advanced packaging is probably one of the core legs of that second bit.
Yeah, that's right, Ramiro. And I would say that there's been public announcements of the progress of our National Advanced Packaging Program. It is a critical part of our $11 billion R&D efforts. That is a critical part of CHIPS. I know we talk a lot about manufacturing incentives, but a long-term success will also depend on our ability to innovate and our ability to get to the next stage of production, and make significant leaps. And so advanced packaging is a part of that. And I think there's going to be an increasing degree of applications. It won't just be limited to the data center. It'll also go to mobile communications. It'll also be in critical industries like defense and automotive. And so it'll only grow in importance. So thank you for the question from the audience and asking that.
Great. Another question that came up on other parts of the ecosystem are there programs to support the manufacturing of critical advanced materials, such as photolithography chemicals that will go into the fabs? And I'll answer that quickly and then turn to others and say the answer is yes. Those projects are eligible for CHIPS funding. Obviously, the program will not have the resources to make awards to all projects, no matter how meritorious, but I think there's an understanding that advanced materials are critical. Dan, anything you want to add there?
That's right. So we have 2 notice of funding opportunities that have been released in the past year. The first is manufacturing projects for semiconductors, and other projects that are higher than $300 million in CapEx or project costs. And then a second notice of funding that is more geared towards smaller projects, that is more targeted at upstream supply, including for chemicals and for equipment, that are less than $300 million in project size. So there's absolutely opportunities for those companies to come to us to seek for funding. And we're seeing already a lot of interest there. And to your point, David, we have the wonderful problem of seeing more projects that we can fund, because anytime that we have more interest than we can fund, that means the program is working quite well. I would say that, going back to full circle a bit about, why we focused on large scale manufacturing as part of our focus, is that when you build these large manufacturing clusters, there is an ecosystem of upstream suppliers that become more organized. For some of these companies and some of these upstream industries, it is critical for them to be in close proximity to these big clusters that are being created. And so it'll crowd in those kinds of private sector investments, even without necessarily US government funding to support those projects. And we're already seeing signs of that happening. It's actually a great time for upstream suppliers to see new opportunities to invest in the United States as well.
Ramiro, anything to add? Or
no, I think nothing to add there. I think you both did it well.
And along the same lines, a question from the audience: are compound semiconductors, gallium nitride, et cetera, covered under the CHIPS Act, and what's going on there? Dan?
Yes, compound semiconductors are covered. For those, I won't pretend to be a technologist here. I'm an economist. Compound semiconductors refers to the material in which the chips are based, that is more than just highly purified silicon. They will add things like silicon carbide, gallium nitride, indium phosphide, those kinds of materials that have very special, unique properties, physical properties to handle higher voltages of electricity, higher reliability. They tend to have different cost structures than silicon. So an average, say, silicon-based chip, the silicon itself, the base wafer could be somewhere between 5 and 10% of the cost, whereas for compound semiconductors could be much higher than that. So it tends to be the product differentiator. Those are all open. Those are all eligible in terms of consideration for funding. And they are part of the vision for success that we have written out earlier when we started the CHIPS program office. That we recognize that there's important innovation happening in both the substrates and the device level for compound semiconductors for critical end uses, and we look at them very closely.
Great. Let me go back to some of the other questions before we go through more audience questions. So, Ramiro, assuming the trends play out as we've forecasted in the report, what do you see as the remaining vulnerabilities? You mentioned the choke points earlier. What would you highlight there?
Yeah, it's a great question. I mean, I think that at the macro level, I think that the availability of talent is kind of a key risk factor. I think there's still. I'm interested to see how investments in assembly, test, and packaging continue to play out. There's been a lot of questions in the chat on precursor chemicals, and so there's elements of the material supply chain that are highly opaque, and so presumably in places where we can't see, there are risks of single points of production or single source, especially for very low volume chemicals. Those would be some of maybe the big factors I might highlight. I would actually welcome Dan's thoughts here though as well.
So could you repeat the question about
thoughts on remaining vulnerabilities, even if things play out the way the report forecasts?
Part of my job is to worry about this industry every day. And so there's always vulnerabilities, and there's always improvements that could be made in terms of balancing the supply chain landscape, but also hardening the facilities themselves in terms of their operational security. We want to make sure that there is a long-term viable roadmap for all of our critical end uses here in the United States, if possible. And I think the momentum that we've generated is a little bit like shock therapy to an ecosystem that needed it. And so I think the thing that I worry about the most is, are we able to take this once in a generational opportunity to create positive momentum and not lose steam a few years down the line? And I say that because, I recognize that in an ecosystem that has not supported a new significant build of big clusters as we have in the last few years, and to jumpstart it with several new ones, there's bound to be some growing pains and some experiences and hurdles that we have to overcome. And that's why we all recognize here at the CHIPS Program Office that we're in it for the long term. This isn't just give out a bunch of money and hope that it all works, but actually create long-term partnerships to execute on the roadmaps that we've created. We consider this as a first wave of big projects that hopefully will build momentum enough for there to be second and third waves to come, for more projects to be here, for the United States to be recognized as the premier destination for semiconductor investments, as you're showing here in the report. There's one thing I noticed. I noticed a couple of questions in the Q&A that sort of jointly refers to SIA and the CHIPS Program Office. Perhaps this will be obvious to most of the audience, but in case there's any confusion, we're not a joint office. I represent the CHIPS Program Office, which is a government program entity. We're glad to see the report that is coming out of SIA and BCG that gives us some barometer of how well we are doing and what progress we need to make in other areas, certainly. But we're not presenting a joint view here. I'm just presenting perspectives from this CHIPS Program Office.
Yeah, Dan, thanks for that clarification. That's important. One vulnerability I would add or potential vulnerability is something not addressed by the CHIPS Act, which is chip design. That's something we're spending a lot of time on here at SIA. Obviously, that's an area of traditional U.S. leadership, and it remains so to this day. And that's a tremendous economic driver and technology driver for the United States. But the point is, we need to keep it as such. And there's some troubles on the horizon, in our judgment, in terms of the startup ecosystem, in terms of published papers at academic conferences. The U.S. incentives for chip research are weaker than some of our global competitors. And so that's one area that I think we would need to devote some attention to going forward. And we're certainly interested in working on that in the future. Before we run out of time, let me ask both Ramiro and Dan, what do you see as next steps? What do we need to do to maintain this momentum? And Dan, obviously, the CHIPS office is continuing with implementation of the existing mandate, and that will require a lot of hard work going forward. But what's the thinking on next steps and the plan for going forward? So, Ramiro, why don't you start off?
Yeah, of course. So I think in the report we highlight a few things that would help to continue the forward momentum and progress. And so I'll just quickly hit on those. Talent, of course, I think I've probably belabored the point at this point, but talent I think is critical. There's an element of both developing endogenous capacity to produce talent, retain talent, recruit talent, as well as there's also with the U.S. in particular, a heavy dependence on foreign-born labor, and so there's I think probably an immigration policy component to this as well. New market development, so supporting some of the the other programs that were as part of the CHIPS Act, especially ITSE and the goals and aims there. A lot of the stuff related to R&D leadership that Dan highlighted, so continuing to invest, the excellent work being done at NatCast and at NIST, on the various programs that are part of the R&D side of the house that we didn't really cover today. And then I think that those would probably be the main things. The last point I would highlight is just the balance of how global trade restrictions or flows play out. I think will be important in how the industry evolves. So.
Great, Dan. I know you can't name names, but maybe you could say a few words on the plan going forward.
Yes, we have several billion dollars yet to allocate in terms of our PMTs. We're working very hard, as we mentioned, and I think we've signaled publicly that we have more demands on our dollars than we have available. It's a challenging work, but I think it's better than the opposite program if we did not have interest in our program. So we expect that those projects to be focused on mature node projects of both high and low volume that will significantly impact our national economic security in a positive way. We also expect there to be several projects that we will support related to upstream supply, meaning the equipment, the materials, and other upstream suppliers that will feed into the manufacturing ecosystem that we're creating here. And of course, there's a lot more to come when it comes to the semiconductor research and development programs that we're standing up in terms of the NSTC, in terms of the advanced manufacturing program, advanced packaging program, Manufacturing USA Institute, and metrology. So all of that is to come in terms of, sorry, excuse my words, not necessarily to come, but all of those will require more attention to make sure that we are executing and progressing in our execution for each of those programs to make sure that we are addressing both the capability building that we focus on here, but also the capacity building that we're focused on here, but also building the technical capability in the U.S. ecosystem. Momentum is a funny thing. Sometimes it goes with you and sometimes it goes against you. And right now we feel very fortunate to have some momentum on our side, and we want to make sure that that continues through. And this is a very dynamic industry. We're seeing AI as a growth driver for both demand and supply of this. We want to make sure that we are creating the platform and ecosystem for the United States manufacturing to support all this new growth and technology innovations going forward.
Great, and from my perspective, I would endorse the comments by both Dan and Ramiro. Regarding talent and developing our workforce. I think the secretary references and emphasizes workforce in every speech she gives. I would add that, the formal name of the CHIPS Act is the CHIPS and Science Act, and there's the and science piece of this, that where funds were authorized but not appropriated, we very much need to appropriate those funds so that we are maintaining our technology leadership, in addition to the important, work of the NSTC and the packaging program and all that. Just two other things I would emphasize is I think in the upcoming debate over taxes that will come up next year when a bunch of tax provisions expire, I think there should be a lot of consideration given to extending the CHIPS tax incentives for manufacturing, expanding it to chip design, and ensuring that we maintain that momentum. And then the final point I'd make is, and I think Ramiro touched on this, is access to global markets. Our industry, over 80% of sales is outside the U.S., and so maintaining access to those global markets will remain critical. So, in the time we have remaining before we wrap up, let me try to get to as many of the audience questions as we can, and maybe I'll ask for some rapid fire speed dating questions here. But what about the impact on AI on all this? Ramiro, any comments there?
I mean, AI is, of course, a massive growth driver in terms of silicon demand. One of the interesting things, though, is I was talking to a friend recently, and he pointed out, I can tell you who's spending $25 billion on silicon. I can't yet tell you who's making money with that silicon. So I think that it will be interesting to see how the ability to monetize generative AI plays out on the long-term demand trend.
Yeah. AI, very important growth driver. There are market inflection points, and this is going to be one of them. Can I challenge the notion, though, of what AI has become in terms of the public perception of what AI is? I think for those that are following it, they kind of envision these big data centers with lots of GPUs and lots of high bandwidth memories, and connecting them. I recently spoke to our cardiologist that makes tiny pacemakers for little babies, and I had a personal story of mine that impacted myself very deeply for our daughter. And they told us of the semiconductor technology that took to shrink that pacemaker to fit a premature baby that is saving lives right now. It doesn't run large language models. It doesn't have a GPU in it. But the doctor looked at me and said, this responds to your child's needs of the heart, whether it's sleeping, whether it's doing an activity of some kind, whether it needs to speed up or down. It responds in real time. So for us, that pacemaker and that semiconductor is AI. And I've been thinking about that concept ever since I've heard that. And I think it's important for us to recognize that, yes, there is this generative AI growth driver that's very important for us to recognize and take advantage of. But there are also very critical AI, if you will, technologies that are smaller, that are more mature, that are saving lives, that are critical for end uses, for people's lives as well as for national defense that we're paying attention to as well. And so for those folks that might be wondering, are we just paying attention to big language model AI driven things? Rest assured that we here at the CHIPS Program Office are thinking about every aspect of AI, every aspect of chips for our economy and for the American people.
Well, Dan, I'll say to the group, there's a great story on NBC News on Dan's very personal story. So, okay, moving on. There's a question here about, paraphrasing here, partnerships with Mexico and the ITSE fund. Obviously, the ITSE is a Department of State program. Several of my colleagues here at SIA are very deep in work with Mexico and Costa Rica and Vietnam and other countries around the world to broaden and diversify the supply chain in key pieces of the ecosystem. I think there are opportunities. I don't know if there are applications from the Department of State. I think it's more government to government dialogue, but I don't know if Dan or Ramiro have any more knowledge on that.
Yeah, I would defer to our Department of State colleagues to address the ITSE fund. I'm sure you can invite them next time. I will say that many governments, many countries are wanting to invest in their own semiconductor manufacturing ecosystem, including in both conventional and advanced packaging. I think it's important for them to recognize that there are necessary conditions in terms of their efficiency of their ports and their trading system, and their workforce that the industry and the companies look for before they commit to such investments in those locations. And I think that's where the ITSE Fund and others could certainly help in making those investments possible.
Great. There's a couple of questions on workforce and talent and the notion that semiconductor manufacturing is not viewed as being cool, and another question about the access to foreign talent and the importance of that. And let me just say the answer is yes, both questions. We face a very significant talent gap in the United States for skilled workers, both whether it's engineers and scientists with advanced degrees or skilled technicians working in the fabs. And there's lots of information on the SIA website on this point. It's a top priority, I know, for the CHIPS office. I think Ramiro touched on the importance of high-skilled immigration reform as being a vital piece of solving that puzzle. That's a subject of another webinar. We'll have to leave it there. I think we only have a minute remaining. I don't think we're gonna. I apologize to all the audience that we didn't get to your question. We did the best we could. Before we run out of time, Ramiro, Dan, thank you, and let me turn it over to you for any closing remarks. Ramiro.
The only thought I would add, I think semiconductor manufacturing is cool. Anyone who's been inside a fab with all of the robots overhead and the massive equipment, it is quite impressive. So that's maybe my final thought. I'll hand it over to
Dan. All right, we're the cool kids table. That's good to hear. All right, Dan, to wrap it up.
I have confidence in the American workforce to meet the challenge of what's coming, because we've created an enormous positive shock to the system. And I have faith in our educational institutions and our state development agency, economic development agencies, to make the right investments to meet this challenge. Really appreciate the opportunity to be here. Thank you for the report that we will take away as early signs of success. It is, I think, in my mind, too early for us here at CHIPS to take any victory laps, because we have so much work to be done and to remaining. And we are approaching this in a way that hopefully reflects a recognition of the challenges that we have, but the importance of the work that we have in front of us. And so thank you again for inviting us. We look forward to seeing another progress report, perhaps a year or two down the line, to make sure that we're on track.
Great. Well, we're right at 3 o'clock. Thank you to Ramiro and Dan. Excellent work, gentlemen. And we hope, for the audience, we hope this was informative and useful. And we encourage you to read the report. And we're happy to continue the dialogue. So thank you very much. Bye-bye.